You've likely heard that LLCs can reduce your taxes, and I'm here to tell you that's absolutely true. Each of these strategies can serve a crucial role in reducing your taxes by applying them to your unique situation. Let's discuss how each one works and how you can utilize it. What are the tax benefits of LLCs and corporations? The corporation or LLC which elects to be taxed as a corporation can be a tax shelter because the tax on its taxable income is limited to 21%. A corporation or an LLC that elects a C corporation tax status can retain up to $250,000 without having to justify and pay a higher tax rate on its accumulated earnings. The accumulated after-tax profits can be used to pay off corporate debt or work capital to operate or grow the business instead of opening a line of credit loan. The taxable C corporation tax status can also be used for income averaging because net operating losses can be carried back to 2 previous years and carried over to future years. Here's the list of allowable tax deductions for LLCs in the USA. Number 1. Charitable deductions. Since a corporation or taxable LLC can only deduct charitable contributions up to a value of 10% of its taxable income, it is usually advisable for the owner to make personal charitable contributions. Note: any excess corporation or LLC charitable deductions not currently deductible can be carried over for 5 years. Number 2. LLC and corporation health insurance deductions. A C corporation or taxable LLC can deduct all of the premiums paid on health insurance for its employed owners and their spouses and dependents. The cost of the premiums is not taxable to the employee owner. Subject to the rules of the health insurance company, health insurance might not be provided to other employees, or might be limited to single coverage. If family health insurance coverage costs $5,000 per year, the owner might have to earn twice that amount in pre-tax dollars to net enough to pay the premium out of his or her personal funds in after-tax dollars. An individual can only deduct the premiums if the total of premiums and other medical deductions does not exceed 10% of the individual's adjusted gross income. Number 3. LLC and corporation disability insurance deductions. A C corporation or taxable LLC can purchase disability insurance for one or more of its executives or other employees, and deduct the premium without the cost being taxable to the executive or employee. The drawback is that the benefits will be taxable when received by the disabled executive or employee. To avoid taxation on the benefits, the executive or employee should purchase and pay the premiums on the disability insurance. After the end of each disability contract year, the C corporation or taxable LLC could reimburse the executive or employee for the premium and deduct the reimbursement. Number 4. LLC and corporation business automobile deductions. The C corporation or taxable LLC could reimburse an executive or employee the current mileage rate permitted by the Internal Revenue Service for the business use of an automobile owned by the executive or employee. Another alternative is that the C corporation or taxable LLC could purchase or lease a business automobile and include a percentage of personal use of the automobile, including trips to and from the office, in the Form W-2 of the executive or employee. The Tax Cuts and Jobs Act substantially increased the deduction over the first 3 years to $35,000. A third alternative is that the executive or employee could purchase the automobile, take depreciation on it up to the business percentage use, and lease it to the business. The advantage of this approach is that you don't have the valuation question of the executive or employee who wants to get the automobile out of the corporation or taxable LLC for personal use when it is to be replaced by a new business automobile. Number 5. LLC and corporation business insurance deductions. You should consult with your insurance agent to determine the various types of insurance coverage you will need for your corporation or LLC. The corporation or LLC should be listed as insured on all insurance policies. You should ensure that workmen's compensation insurance covers all individuals the corporation or LLC employs. The corporation or LLC may want to purchase professional liability insurance if you are a consultant. The individual owners who the corporation or LLC employs should consider purchasing an umbrella liability insurance policy, with no less than $1 million to raise the coverage limits of their automobile and homeowners policies. The premiums for the foregoing insurance are deductible by the corporation or taxable LLC. Number 6. LLC and Corporation Office at Home Deductions. The Internal Revenue Code has been liberalized to allow a corporation or taxable LLC to reimburse its employees for their office at the home expense, so long as the office at home is used regularly and exclusively for administrative and management activities of the business, and/or for storing records, inventory, or product supplies. The reimbursement could be paid monthly or yearly, is deductible by the corporation or taxable LLC, and is not included in the employee's income. The items that can be included in the office at home calculation are homeowner insurance, cleaning, maintenance, utilities, and telephone. The reimbursement is based on the percentage of office at home space in relation to the overall space in the home. The IRS allows an office at home reimbursement of up to $1,500 without itemizing expenses prorated, up to 300 square feet for the office at home. Although depreciation could be taken on the office at home space, it would be recaptured upon the home's sale. In order not to lose any long-term capital gain exclusion, $500,000 for married couples and $250,000 for single taxpayers, it is advisable to not take the office at home reimbursement during the last 3 years before your home is sold. Number 7. LLC and Corporation Tangible Property, Section 179 Deductions. Section 179 of the Internal Revenue Code permits the deduction of up to $1 million in the year of purchase of the cost of tangible personal property to be used in the business. Computers, off-the-shelf computer software, and office furnishings qualify as Section 179 property. The Tax Cuts and Jobs Act added the cost of roofs, HVAC, fire protection, alarm, and security system in non-residential real property to the allowable Section 179 deductions. Since there is an advantage to offset the cost of Section 179 tangible property against income in the year of purchase, you could plan to stagger your purchases in different tax years of the business. Number 8. LLC and Corporation Retirement Plan Deductions. A corporation or LLC can deduct contributions to qualified retirement plans. There are a lot of choices for qualified plans with different deduction limits that can be adopted. Plans can be adopted that provide immediate vesting or staggered vesting of the participant's account. The contributions to the qualified plans accumulate tax-free until distribution to the employees upon death, disability, or retirement, when it is then subject to income tax. If an employee changes jobs, he or she can do an income tax-free rollover of his or her vested interest to another employer's plan, or to a rollover IRA account. Number 9. Children as tax shelters. The minor children of business owners can be paid for working for the business after school or during vacations. In effect, they can earn tax-free allowances or save for education. A child for whom a dependency exemption is allowed to another taxpayer may earn up to $6,350 without filing a tax return. Even though Social Security contributions must be made while children are employed by a corporation or LLC, a Form W-4E exemption from withholding tax can be filed. The child can also contribute up to $5,500 of his or her earned income to an IRA or Roth IRA. Number 10. LLC and Corporation Business Entertainment and Meals Deductions. A corporation or LLC can deduct up to 50% of the cost of meals consumed during times of business entertainment or professional development. The cost of meals with employees is 100% deductible. Number 11. LLC and Corporation Education Expense Deductions. A corporation or LLC can deduct education expenses, currently limited to $5,250, of its employees for them to maintain or improve their skills. The reimbursement for education expenses under the employer's Education Assistance Program is not included in the employee's income. Number 12. LLC and Corporation Longevity or Productivity Awards Deductions. A corporation or taxable LLC can deduct up to $400 of the cost of tangible property given to an employee by declaring it a longevity or productivity award. The award can be made every 5 years on a selective basis, with possible recipients including the owners who are employed by the business. The cost of the award is not included in the income of the recipient. The Tax Cuts and Jobs Act specifically excludes awards of non-tangible items such as cash, gift cards, vacations, meals, or tickets. Number 13, LLC and corporation dues and subscriptions deductions. A corporation or taxable LLC can deduct the cost of dues for business or professional organizations, and/or the cost of newspapers and subscriptions related to the business. The cost is not included in the income of the employees who benefit from them. A sole proprietor could only deduct his or her expenses to the extent that the cost exceeds 2% of the sole proprietor's adjusted gross income. Number 14, LLC and corporation conventions and continuing education deductions. A corporation or LLC can deduct the cost of travel, lodging, meals, and program fees for employees attending conventions and continuing education. This includes one or more owners employed by the business. The reimbursement is not included in the income of the employee. Number 15, LLC and corporation independent contractor agreement. If a consultant or manufacturer's representative forms a corporation or LLC through which to receive his or her income, it is important for the corporation or LLC to execute an agreement with the client or manufacturer stipulating that the corporation or LLC is an independent contractor providing the services of the consultant, and is to be paid directly without any employment taxes or withholding. It is not unusual for a retired executive to form a corporation or LLC to consult for the former employer on special projects or other clients to get the tax advantages of a corporation or taxable LLC. Here are some other financial considerations you can look at, which is not directly linked to a tax deduction but can benefit your LLC in the long run and save money. Number 1, electing a fiscal year by corporation or taxable LLC. A C corporation or taxable LLC can elect a fiscal year that will straddle the individual income tax year of December 31st. Therefore, the income of a corporation or taxable LLC before December 31st can be deducted when it is paid as compensation after December 31st but before the end of the fiscal year of the corporation or taxable LLC. A fiscal year can end at the end of any month within 12 months after the month in which the corporation or LLC was formed. The fiscal year election is made on the corporation tax return, which is due to be filed within 2.5 months after the end of the first fiscal year. Note, the fiscal year of an HES corporation or an LLC that does not elect to be taxed as a corporation will end December 31st each year after it is formed. Number 2, interest-free or low-interest loans from LLC or corporation. The accumulated earnings of a C corporation or taxable LLC can be lent to the owners of the corporation or limited liability company. A loan of up to $10,000 can be made without interest to each owner. Minimum interest, such as 6%, should be paid on the entire loan if the loan exceeds $10,000. If a C corporation or taxable LLC needs working capital, the owner could make loans to the corporation or taxable LLC after the initial capital contribution. Note, under Delaware, Florida, and Nevada laws, there is no minimum capital contribution to a corporation or limited liability company. The advantage is that the loans can be repaid out of corporation or taxable LLC earnings, accumulated at the low 21% corporate or LLC tax rate. This avoids the money being locked in the corporation or LLC as a capital contribution until the corporation or LLC is liquidated. For the repayment of a loan from owners to not be considered a dividend by the Internal Revenue Service, it should not exceed 5 to 10 times the amount of capital contributed by the owners, i.e., debt-to-equity ratio. Loans should always be documented with promissory notes. You've just learned about some of the most interesting tax-saving ideas for your LLC. It's easy to get overwhelmed by all this information, so try and approach these strategies one by one. To ensure you've covered all your legal responsibilities as a new business, it's a good idea to consult professionals for advice. Consider sitting down separately with a lawyer and an accountant to ensure that your company is covered from a legal and financial standpoint before opening for business. It's completely possible to register your business on your own. But there are many moving pieces here, so it can be helpful to have a long-term partner that takes you through the business formation process smoothly and accurately. Incfile is an amazing company that will guide you through every step to create your LLC. They even have a service where they will file your LLC for you without you going through any hassle. Watch the rest of the video, where I will show you how to form an LLC in under 5 minutes through Incfile. Incfile is one of the best companies out there to help you form your LLC. You can click on the link in the description to get access to this deal. Incfile is one of a kind as it offers a free package with services such as preparing and filing your articles of organization. Well, you still have to pay $237 for the state fees, which you would have to do anyway if you chose the DIY option. But looking at the bigger picture, all other companies will still charge their service fee on top of state filing fees. Incfile does not collect this fee. This plan already includes a free registered agent for your first year of subscription, and $119 annually moving forward if you decide to continue the service after the first year. Incfile's next packages are the Gold and Platinum packages, which both have package fees, already on top of the $237 state fee. Each package has its own set of services which are all worthy of the subscription you are paying for. The Gold package offers you the benefits of filing reports and taxes for your LLC. Every year, USA LLCs are required to file a state annual report. This report is essentially an information update of your file so that the state knows who is now in charge and how to contact your company. USA LLCs are also required to file state tax returns. To make matters even more complicated, your annual report and business privilege tax share a document and are due at the same time each year. With the Incfile's Gold package, you won't have to scribble notes of these reports because Incfile will handle the whole process for you. Your Platinum package also has these services in the bag with the unique addition of expedited filing, getting a domain name, and a business email which essentially increases your LLC's credibility. Incfile also has an exclusive partnership with Bank of America so you can easily open an eligible checking account for your business. Yes, it is a must for your LLC to have a business account. Remember, an LLC has limited liability, for it is a separate entity from its members. You may forfeit your liability protections if you combine your personal and business money, and this is where the term, piercing the corporate veil, comes into play. Piercing the corporate veil is an LLC jargon that refers to the court's action to hold you as the owner or member of an LLC, personally liable for the LLC's debts or actions. Now, if you have been sued by some lawyer who sees a crack in your LLC, they might resort to piercing the corporate veil in which you are in any position defeated. This is why opening a separate bank account for your LLC is so important. Do you like the level of detail I'm providing you in my review so far? If yes, then make sure to let me know by liking my video and hitting that subscribe button for more high-quality business content.